Hi, it's a pleasure for me to participate in this virtual summit. And I guess during the COVID-19 era, it's important to share knowledge and to help each other to understand the ecosystem better. So here's what I'm going to try to do with you. My name is Constantin Kogan. I'm a partner in Bitbull Capital. It's the first crypto fund of funds. So we're going to go over the topic of the evolution of crypto hedge funds and what is the latest updates from the investment standpoint of view. And I hope this topic is interesting, and I hope this topic will help you to navigate your startups or hedge funds and understand what's actually happening in the industry. So if you have any questions, I'll be delighted to answer them, and I want to make it as interactive as possible. So please do it and the moderators who are helping to run this summit and make it live, they will post it immediately, and I'll try to interactively answer them. So in a nutshell, just probably give you a little bit of historical context. Why am I even talking about this particular topic? Like we merged in 2017, and fund of funds, typical structure, it's another layer on top of hedge funds. So we are due diligencing like the managers of other hedge funds and making sure that they have best practices in their strategy, the team is robust, they have a great vision, that their legal and compliance practices are also entail with the standards of best hedge funds, and that the size that they have is appropriate for them to grow, that they have the skin in the game, and they have their own money allocated to the investments, whatever the thesis may be. And essentially, there are different strategies which we explored, and we due diligence more than 600 crypto hedge funds throughout the 2.5 years. And I would say nowadays we can safely conclude that we understand certain aspects of how the industry works from this particular angle. Again, a few words about myself. I've been also involved in different projects, from just regular tokenization and like reading hundreds of different white papers and research papers, and also participating in some of the disruptive projects in real estate tokenization and other advise several platforms. So to begin with, I want to just know that currently there's a roughly 800 plus hedge funds in the world. I'm talking about specifically crypto hedge funds. Now, when we say that, like, I hope the audience is also understanding that like not all of them are actually a traditional hedge fund, and as you would understand it. And what do I mean by that? Well, you can imagine that there are a lot of companies who are also combining the advisory services and investments, so they can have smaller allocations. So your standard SPV, special purpose vehicle, where you can set it up in BVI, Cayman Islands, or like Singapore, or any other jurisdictions that you prefer, and essentially invest in any project. For that, you don't even need a hedge fund. However, the natural transition of any people who are doing that, so they're syndicating different investors, whether they're coming from the United States, China, Europe, doesn't matter, and they make sure that everything is distributed properly. And I'm talking about the equity and the rights. Everything is clear legally, and everyone is happy. And imagine they invest in some company that they have proportionally then distributing the equity shares, and from there there are a lot of ways how they can then gain trust of investors and set up their own hedge funds. So I just wanted to stop here for a second and say that a lot of folks who I know personally, they actually emerge from the times when they're like invested in ICOs and Well, not all of them, by the way, were scams. Some of them were great projects, and they gained trust of some some angel investors and even private equity investors, and then they transitions into setting up their own firm. This is one type of hedge funds. The second type of hedge funds is, I would say, the folks who are coming from traditional finance background, and they might have a different mix of people from crypto industry who understand technology, cryptography, or just they are savvy enough to analyze the white papers from a technical standpoint, and they can be obviously great in accounting, finance, and different domains which are I would say adding up to each other. And those people, they have more, I would say, institutional grade teams. So that means they might have hedge funds over $50 million plus, and they have ability to allow themselves different type of investments, different type of back office, and all the, I would say, all the concerning questions that anyone would approach to due diligence a hedge fund. Now, what was interesting lately, like, imagine yourself, right? You wanna let's also try to role play here. Where I can understand, like, if you were to invest in crypto hedge funds, so what would be your goal? What would be your motivation? How can one approach to due diligence a hedge fund, right? So of course it goes to simple notions. You analyze always performance, team. You analyze the ability to actually protect and defend your thesis, like your investment strategy, and outperform certain benchmarks. For a lot of crypto hedge funds, as you can imagine, the benchmark is, let's say, just passively investing in Bitcoin and hodling, right? Or it can be index funds, So whatever that might be, so they should have certain benchmarks, and there are different types of strategies. So the venture capital strategy, as I'm sure a lot of you know, this is more long-term investments, and traditional VCs, like from 8 years lockup plus 2 years. So that means your money are locked for a certain period of time, but they can be distributed even earlier when some great projects they can have some next round of investments. And so, but typically you can think about of it like as if it's a longer term strategy for you personally, right? There are different hybrid models, between more I would say liquid funds, like where they're like having like 3 to 5 year lockups, and there are I would say more actively managed and more liquid funds, which is like 2 years or 1 year lockups, right? To give you an example, our fund is 1 year lockup. So I know a lot of funds who are doing that, or they're having different strategies. So they might have, as Pantera Capital, they might have like 5 different baskets, and different funds for different types of investors. Now, from there, it is important to understand that, like, from the 800 plus crypto hedge funds, which I mentioned, and it's really hard to calculate the exact number because, as you can imagine, some funds can be closed already, or some funds can emerge. Like every month we hear some of the great announcements. And recently there was a great research actually that was run by PwC. And also Elwood, the annual crypto hedge fund report. It's actually pretty recent. I implore you to take a look at it. And I would say the key takeaways from this report was that the overall, like, the global increased capital inflow to crypto hedge funds, we're seeing about $1 billion plus, than if we compare it to the previous year. So that's good news. That means we're having inflow of new capital. That means that there is more trust to this industry. Then the percentage of crypto hedge funds, with AUM over $20 million, has also increased, from 19% to actually 35%, which I also consider a very good news, because there's a huge difference between $20 million and $50 million hedge funds, and then $50 million and $100 million hedge fund. But maybe not so, like, maybe not huge is an exaggeration, but I would say like there is a difference. What you can afford, how you can scale, or what type of people can you attract to your hedge fund, etc. Now, and the average AUM increased, like, from like about $22 million to $44 million, while a median like AUM, median increase AUM like from 4.3 million to 8.2 million, which is also, I would say, very, very good news, right? So we see more even humble and nimble, smaller hedge funds, like whether it's a VC strategy or a trading fund, they're having more, more capital, almost like doubled, and that's really good news. That means that the market will have more liquidity. That means we will have a different trust in the entire ecosystem. And so before I go to other topics, I want to stop for a second. So there are questions, and I promise you that I'll make it more interactive. So first question is, how far you are with the large institutions allocated to Bitcoin? Well, I'm sure you've heard recently. There's several billionaires like who supported Bitcoin ecosystem, and they believe that the thesis of uncorrelated asset class and asymmetric returns being like over the past 10 years, one, like, if not the best asset class, like by performance, then one of the top asset classes, right? So I would say it's very, very realistic. It's very relevant, and the more and more family offices, private equity firms, and they join the game, and they understand that not necessarily you will put all your money, of course, in it, but you definitely, like, if you are not allocated at least like a percentage, like 1 or 2%, whatever that might be, like according to your to your preference and your investment thesis, that means you're basically stealing from yourself. Because if you believe in certain aspects of modern portfolio theory, like if you believe that diversification is important, if you believe that it's smart to provide like yourself access to the asset class, which is now we have a certain history performing in a great manner, then I'm sure that it's happening. We hear a lot of news like that. So endowments, we hear like other different institutions, who are joining the game, and sometimes it's the direct investments, sometimes it's indirect. And it really depends on the caliber of the hedge fund they're allocating to. If it's like I call it an indirect investment. So that means they invest in a layer of a hedge fund, and the hedge fund later on goes and invests in the project or whatever, or just invests in a token or any crypto asset like stablecoin. But this money is still circulating within the industry. So yes, we're seeing a lot of new interest, especially during the crisis. The other question is, what are the biggest challenges for the crypto funds right now? Well, I would say that they're the same as they were before. There's a lot of, I would say, there's a lot of operations they're put on pause. There are a lot of folks are not actively allocating money. But again, I see some great news. Listen, there's some good partnerships, some good merger and acquisitions. I would say this is a great time for mergers and acquisitions. So M&A is like booming. There's a lot of great examples of that. I would say that bigger funds obviously still have the flexibility to allocate. I know that Holochain, Pantera, funds of this caliber, they're still active and they actually allocated. By the way, if you have an opportunity, I've on my YouTube channel, if you just type my name in YouTube, you will see that I've interviewed Dan Moorhead from Pantera Capital, where he actually provided some of the examples of the projects they allocated to. And that brings, I would say, a lot of hope and positivity that it's still doable. I mean, with all honesty, you may understand it's less active, right? So there's a lot of uncertainty and what's going to happen next. So, and fundraising, it's always tough because people consider that, oh, okay, if you're a hedge fund, you have a lot of money, so please give it to me, right? well, nobody's ever asking like, how are you raising money, right? So to raise money for a hedge fund, especially if you're an emergent manager, meaning like you are not coming from, the Tiger 21, like or target management, or like I would say like any other like big institutions in the game, like Ray Dalio caliber, or even smaller one from investment banking. If you're just an enthusiast and you're willing to allocate your own money, and then your thesis is proven that you're making, I would say, tremendous returns, it's still tough to convince someone to trust you, because money is a form of trust, so that's I would say it's a journey, it's a game, like of a long-term game. So but it's still happening. Do you have an opinion on the Holochain project? I have an opinion, but to be frank with you, I wouldn't go into this topic, because my topic is crypto hedge fund. So on a separate note, we may talk about it, but probably not this time, because I have only like 30 to 40 minutes. Now, I mean, I like the project. Just I will tell you this. Like I read their white paper, and I have a lot of friends who personally allocated to Holochain, if that's helping you somehow. Now, do you think the virtual currency will exist in a complexity different, and I think in a completely different form than it is now after 10 years? For example, no wallets. Well, it is possible. Look, realistically, no one knows what's going to happen in 10 years. Like, we are developing in every domain so rapidly. Like, the information flow is like insane. Like I think it's important to say that it's not just in crypto world, of course. Like I'm sure you follow, a lot of you know what Elon Musk is doing with Neuralink. Like, imagine there's going to be a chip that is going to be implanted in your head, and is going to work with your neural cortex, and it's going to basically download or upload certain files. And like, he's predicting that in 5 to 10 years, you will have no need to even communicate like linguistically, verbally, like as we know it today. Now, I mean, this is only a hypothesis, right? But just for a second, right? Imagine that is a reality, that telepathy, like like it will be reality. Like, then of course we will no longer need to have even like a lot of different forms of communication. And bear in mind that like the sending money transaction, where there's a lot of processing, there's a lot of banks, intermediaries, I would say, like involved in this entire process of transferring like $1 or transferring $100,000, doesn't matter, right? And it's a transaction of data, right? And we're just using a certain technology to make it more user friendly, faster, I would say, with less fees. And blockchain technologies and just generally DLT technology, I would say that's a great example, like how it makes it more efficient and more robust, more secure, and again, decentralized, where the opportunity, you don't rely on one server. And there's definitely an evolution, and no one knows what's going to happen in 10 years. Maybe we'll not, like NFT technologies, when you're right now, you can, with Apple Pay, you can actually pay like in a lot of stores. I'm sure in Asia that's the case, in the United States that's the case, but you should be asking yourself how many people are using it. So that's a different story. Now, coming back to funds, how can one see a good fund from a scam fund? That's actually a great question. That brings me to another topic, like where I've mentioned before that there's about 800 of the crypto hedge funds, and the launches per year, just to give you like a historical reminder, those 152 hedge funds in like less than 150 in about 2014 before. Then in 2014 there was like 36 emerged, like then 2015 42, then in 16 there was 46 more, and then in 2017 and 18 we've seen a boom, right, and a spike where there's a lot of interest, naturally, because of the FOMO, like fear of missing out, like, and a lot of hype. And I would say that there were a lot of scams, like even in a crypto hedge fund industry. I can tell you, what do I mean by scam? Like sometimes you can be there, all your paperwork can be great, but people did not have great custody practices. They were holding like all the assets, their crypto assets, on the cold wallet, like ledger, like, and you can just take this like in your pocket and fly to Bermuda, Bahama, like whatever the island you prefer, like, and disappear. So you can imagine that that's not really safe, neither for a hedge fund manager or for an investor. There's less of that. I would say survivors, what I call it, this period of time is only for people who take it seriously and who are applying the best practices. And there might be a few, but like the way I see right now, the trend is very simple. All the scammers, most of them, like probably I would say 90%. It's hard to even compute that, but they disappeared. They just naturally were weeded out because they could not comply with different like scam artists, like schemes that they try to portray themselves as like successful people. I know a gentleman who actually was brilliant, but he tried to raise $20 million with no legal entity, being in the United States, which is one of the highly regulated markets in the world. I'm sure you know that. And he tried to raise money like from retail investors without even having a proper legal entity. Now this is a pure madness. Right now he has having a lawsuit against him, and it happened. Right, it happened especially in 2017-18. Now I don't see a lot of such things happening right now. I see a lot of actions where SEC, Security and Exchange Commission in the United States, is just pursuing the old cases, right? And they're trying to basically figure out the best practices and provide guidance. Actually, very cooperative with people who are trying to work out with them. Some of the folks received even notification from SEC and asked like to change the information on their website. It was a very nice, like it's not like they're trying to go and portrays a convict, felon, or like a person who's trying to trick anyone. They're trying to work with you if you are willing to do that, right? And that's the name of the game. Just be legal, be compliant, be smart enough to actually care about your investors, and that's the name of the game. Now there is some. What is a good return? I mean, that's a very tricky question. I don't know how to answer that. I will tell you this: like, if we were compare performance and fees, that is important. A typical hedge fund, I would say, from traditional industry, it's 2 and 20, right? So 2% management fee and 20% performance. So right now, the median crypto hedge fund returned plus 30% more, like in 2019 versus 46% in 2018. Like, and a lot of them actually lost money. Now it is important to understand that 2018 was a very, like, we call it a crypto winter. It was a very unfavorable time for the industry. There's a lot of scams, like revealed. There's a lot of mistrust. There's a lot of price manipulation. You name it. There's a tremendous amount of like bad publicity, and again, deserved, because look, if some people are taking the technology and using it in a poor way, it has to be punished. It's very simple, right? So now what people forget, that similar happened in .com. You know how many scammers were in .com era? Like, people who would try to use great technology, like, the beginning of the internet, they were trying to scam people and, use it for any purposes, to sell you the product that never existed, to invest in a scammy project, to money launder, to you name it. It's just in nature. It's a human nature. Now, coming back to the performance, now, of course, you, as I mentioned before, you need to have a benchmark, right? So imagine you would put, like, again, hypothetically, $10,000 to in Bitcoin, right? And you would buy it, and your goal is to hold it for a year, and then you can comfortably like talk to your financial advisor or whoever is helping you, or maybe conclude, you know, that yourself. Imagine you want to make like 20% profit, right? And this is not, by the way, any financial advice. I'm just giving you a hypothetical case, right? Then if you going out of the position, right, and like, and you understand what you're doing, like that you're just speculating in a way, like, and you're expecting certain returns, that's your goal and that's what you're doing, and you understand where you're investing. It is very important to understand where you're investing. Now, the job of a hedge fund is to outperform the passive investment like that, because if they're not able to do that, like, you know, why would you even allocate money to hedge fund? Why would you even pay 2 and 20, right? It's very simple. Like, you know, the best performing buy strategy in 2019, there was discretionary long only. In average, they made 40%, 40% plus. Then followed by discretionary long short, in average plus 33%. And then quantitative, 30% plus. Multi-strat made an average 15%. So those are the numbers. You can then go to different crypto hedge funds and take a look what is their strategy, right? And how it is like congruent, like how is it like native to you, right? You know, how do you feel about this particular people who are you partnering with? Because remember, you're going to be a limited partner. That's the name of, you know, of an investor. You're becoming a limited partner. So and they are general partners, so they, you know, they accept you as an investor technically, but you know, you're becoming, you know, part of the, like, a big vehicle. In terms of the management, give you an example, right? You know, the fees remained unchanged. Like, again, it's 2 and 20, very standard. Although the average management fee increased even sometimes. You know, so from some of the folks who were doing 1.7, now it's like 2.3 in average. And when I say in average, that means like some funds were taking 2%, now they're taking 2.5, right? And some funds were taking 1.5, now they're taking 2. So when you know, compounding those numbers, like you have like an average number. So same as performance, you know, like but when I say the same, but the performance actually decreased. So the, you know, from 23.5, so there are a lot of funds were taking 25%. Now it's they're going to 20%. So meaning, so in average is 21 and 0.1%, which is great news. And 65% of the crypto hedge funds have either a hard or soft lockup, and so they're like 63% of have either an investor level or fund level gate. And we can talk about the gate separately. What it, you know, it helps you to, you know, the lockup is very simple, right? You know, it's how, you know, that your fund, let's say, locked for 1 year, and that's like, that's helping a hedge fund manager to make sure that, you know, he can, you know, then go and allocate your money and bring you returns. And you have to notify per typically a hedge fund manager, like, you know, I would say like in average, I would say 90 days before that, but it really varies. And that's how it works, you know. So so sorry for the extra sounds, you know, like I've also working from home with kids involved. So any other questions? I'm happy to answer. Is there a strategy to buy more and hold, or active trading? Yes, of course. I mean, I think I've answered before about the different strategies and how they perform. There's definitely, I'm a big believer that active strategy are, again, at least to me, are more attractive. And that means like you should outperform the like any passive, like, you know, buy and hold strategy. Like that's like people who are, let's say, trading top 20, top 30, and that helps, you know, a lot, and to showcase that that is doable, whether you're doing high frequency trading, whether you're doing like long short, you know, like the idea is to showcase that whenever you're just allocating directly to a crypto asset, right, you're actively, as a hedge fund manager, you're helping your investors to have an additional, you know, delta between, like, you know, the money they would have in this period of time. So what are you looking for white paper to make a judgment, red flags? Oh, I to in all honesty, like I try to read less of white papers right now. It was a lot of time consuming, and some of them were written in a very technical language, which oh, with things that I would say were unnecessary. You know, there some of them were trying to make it more complex than it is, and we were even partnering with some folks to do an additional due diligence on the technical side and the financial side. So, well, the red flags are again same as any investments, right? You try to understand the common sense, the logic, if there is some science, meaning math, and cryptography. If it's another chain, I'm talking about like a new blockchain or whatever, or if it's a new, I don't know, lending platform, or if it's a project is, they all differ. There's no one project like alike to another. Like even competitors, they have certain comparative advantage. So you have to just analyze the entire thesis. You have to understand if it's logical, if the numbers work well, if the team again is capable of doing what they are promising to do, right? Because remember that an idea is only like probably 5% of the entire project. The implementation matters. So you're looking at the people. Do they have this experience like prior to these particular projects? Like what they were doing before. And I would say if they don't, right, do they have enough passion to go and sacrifice a lot of things in life to make it happen? Because there's a lot of young entrepreneurs in this space, and on the one hand it's great. I'm a big believer that's like amazing, and there's a tremendous potential. I'm talking about brain potential, like and but it's also challenging because if an entrepreneur did not have any prior success story, it's not always about the capability to write a code or to draft a financial plan. It's also a lot of other, I would say, complicated aspects of business which you need to take a hold of, and you need a good team to support you. You need a good advisors and investors to support you, and the community, right? So the community building is a separate skill, and not all of the projects actually have it. Um, the other question, what are you looking for? Oh no, sorry, this is what's the strategy makes BitBold Capital be success, and except managing investment, does BitBold do other services for your clients? It's a great question. So again, we are diversifying assets, and so the if you look at our website, there's a we actually describe like very very easily, like what is the strategy, like where are we allocating funds, some of the underlying funds in our strategy. So for example, we've allocated to Holochain, Pantera, Metastable, and 7 more funds. And that's one benefit. I will give you an example that some of the funds, they have higher lower minimum. So if you have only, I don't know, $50,000 to $100,000, you will not be able to allocate to certain funds, and because they have higher ticket size, it can be 250K or 500K. But when you are fund of funds, the benefit that you can still diversify your assets, and allocate to the greatest and best performing funds with lower ticket, number one. Number two, you have a benefit of a team that actually due diligence a lot of crypto hedge funds, like probably 2/3 of the entire industry, understand the strategies, understand the space, and basically help others to get the most out of it, right? Number three, we consider that in a way we want to mostly invest in active managers, and uh, we believe that's our core thesis. Like if you go to our website, you will see a lot of resources. We made like a huge amount of like publications and presentations, and we do have another opportunistic fund, which is going to be under the umbrella of fund of funds, and you can take a read of it. It's actually performed greatly, and before that. So we believe like our benchmark, I would say we outperform an index, right? If you would create an index of top 30, right? And top 30 cryptocurrencies. That's also an option. But right now the index, like, it gives you no exposure to pre-ICOs. It gives you mirror the volatility of the crypto most of the time. And it's buy and sell monthly, and that means, like, the frequency is completely different, like, and the track, it just, like, again, mirror the market. It's like tracking, like, the returns where you are not able to understand, like, how which asset performs, like. And yeah, I would say that this strategy is not robust in our opinion. And in various strategies, often, I mean, like, what we are aiming is to, regardless of the market conditions, how can you outperform the market? That's what I believe successful hedge fund managers should be aiming to. And we're incorporated different strategies to reduce the risk and increase the upside potential. That's, I would say, the core thesis. And we don't do any other services right now. Like, and again, on a personal level, Joe DiPasquale and myself, we're just helping a lot of folks to just grow. Like, if we can help, okay, there is a lot of underlying projects, like, of our hedge funds that we invested in. Like, they sometimes need certain connections, partnerships. Like, I've helped some folks to connect with some banks, with some processors, with custodians, with developers, So, but that's on a personal level, right? So, as a fund, we are laser focused on what we do, and that's makes us successful. Now, we have only 5 minutes left, so I'll try to answer more questions if you have them. Oh, the capability for 2020. I'm not sure I understand the direction of this question, but I'll try to answer as I understand it. If you're talking about our personal capability, like, and, like, I would say the vision of BitBull, that's all. The clarification starts up a bit above. So on the investment side, I would say it's still unknown, right? We I don't know, like, all the latest news in the Asian part of the world. I know that a lot of countries were, like, already open from the lockdown. Here in the United States, and specifically, I'm in New York. My partner's in San Francisco. Like, it's still, like, a lot of unknowns. Like, the global recession impacts crypto assets, even though we say it's uncorrelated. When we have such a huge macroeconomical change in the world, you can no longer say that it's not impacting, like, one certain asset class. Like, it's not fair. It is impacting everyone, every company, every hedge fund manager. There are no exceptions. So you can think about it that once we're going to have a vision how the global economy will restore, itself, and we probably need to make a paradigm shift, right? And change, a lot of monetary policies and fiscal systems firsthand. But it's a separate topic. I would say, simplify your question. Are there projects appearing? Yes. Do some of them raise money? Yes. So it's natural selection, right? People who are striving for success, I think they will be successful at any period of time, period. There's still about 1 trillion unparked money in the world. And trust me, there are a lot of opportunities for any given projects, considering if it's actually solving a problem that has a great vision and a great team, and it's actually there to change the world for good. I'm sure there are opportunities to raise money. So with this, I would say, like, just keep it positive. I for the entrepreneurs who are listening, I really wish you well. And I know it's challenging to raise money in this period of time, but keep on doing that. I'm sure there are a lot of ways, and a lot of folks, like, they can contact me on LinkedIn. There's still projects, like, going on. And by the way, all over the world, not only in Asian part. I have some projects reaching out from Europe, from Asia. For hedge fund managers, especially for emerging managers, again, also don't give up. Same thing, same advice. Like, there's a lot of fundraising opportunities. There's a lot of folks who are institutional grade investors are joining the game, and it's just a matter of how you articulate the value. So thank you so much for your time, for listening to me. I hope it was somehow helpful to you, and I wish you be safe and keep the positive mood. Thank you.